Welcome to Liqwith TV and our exciting new webinar on blockchain for investment funds. Today we have Herman Vissia, CEO and FinTech Visionaire, and Roel Wolfert, serial entrepreneur, joining us as our expert speakers. They will be sharing their insights on the current landscape of blockchain technology in the investment world and how it is shaping the very near future of investing. Feel free to send in your questions during the webinar through the chat, and we will do our best to answer them at the end of the session. So sit back, grab a cup of coffee or tea, and get ready to learn about blockchain and its great potential for investment funds.
Ja, oké. Nou, welkom allemaal bij de... Pardon? Oh, welcome everybody. Yeah, it's English this time. Our first webinar was in Dutch. We've decided to do it in English. Welcome everybody. Very happy to host the second webinar of Liqwith. This time it's a duo webinar actually. Delighted to have Roel Wolfert here. Roel, let's first start with the introduction, so people know who I'm talking to and what expertise you have.
First of all, Herman, thank you very much for the invitation. It's a pleasure to be here. It's a little bit weird not to see anybody on the other side, but okay, that's what you have with live television, right? It's not a theater show. For the ones who don't know me, my name is Roel Wolfert. I'm 25 years in technology and financial services. Today I'm an entrepreneur, and in the Netherlands they say bedrijvendokter, but I actually am working in the private equity industry and transformation consulting. So that's my expertise. Goes back to technology, tokenization, finance. And beyond that, I am the supervisory board chair of Two Tokens Foundation, which is all about tokenization as well. So, and every now and then I teach blockchain and tokenization at university.
Okay.
So it's basically my whole life is tokenization and finance and blockchain. So.
Well, we have to be honest. Yeah, we know each other quite some time, and I still remember our first public appearance in Moscow.
Yeah, that was
2017. It was already where actually this whole idea of tokenization materialized, I guess, for you and for me.
Yeah, well, if you remember correctly, Herman, I think we were, at that point in time, I just delivered the Bancor ICO, which was a utility token, and in June that year it hit a world record of a raise of $160 million in Ethereum in 2.5 hours. Yeah, and the Ethereum price then, we probably forgot that. That was, I think, 160 euros or something like that.
It's unbelievable.
So about a year later,
less.
that was $1 billion.
Yeah.
And crazy days, but I remember very well our conversation we had based upon that. I said, look, this is a utility token, people put a lot of money in it, but how are the investors actually protected? Yeah. Right? Because there was a lot of money and there was a lot of responsibility that we picked up in the Bancor team at that point in time, which also made me think, because there were a lot of scams happening. Yeah. And scams, to be really honest, those are generally, you have two types of scams. The one where a project is initiated and it fails and people think I lost my money and therefore they feel scammed, but it's just a high risk industry, right? And the other scam is that there were really people selling consciously bad products to raise money and never to deliver on the promise.
Well, actually it's good that you mentioned it, because we have actually made a small video about that, and I thought it would be a good idea if we dive deep into the topic of today, which is the blockchain solutions for investment funds. That's basically the topic of today. That we first just look at what are we talking about? What is a token? I think we have a small video lined up, and we're just going to watch it, and then we take it from there.
Absolutely.
Okay.
Maybe you have heard of tokenization of assets, but do you know what it really is? Do you know how tokenized assets compares to cryptocurrencies? Can you tell the difference? All these questions and many more will be answered in this short video. Let's start with the fact that asset tokenization is not directly related to the cryptocurrency market. Many people confuse tokenized assets with cryptocurrencies. This is, of course, totally false. What is really being used when tokenizing assets is distributing ledger technology, DLT, or blockchain technology. It is thanks to this technology and the technology of smart contracts that the concept of asset tokenization has become possible. Another profound difference is the fact that tokenization is the ability to display a real asset on the blockchain. Real, not virtual. The value of a tokenized asset cannot be less than its real value. For example, art tokens of a valuable painting will not be cheaper than the painting itself. It is actually rather the opposite. Due to the fractional ownership of such a painting and the promise of free secondary trading, the total value of the tokenized painting can increase by 10 to 25%. Cryptocurrency creation is often perceived as a technical process that just needs to be implemented. With tokenized asset creation, however, we also have to implement legal and operational processes. The issuer cannot just create a token on the blockchain and imagine that this is a tokenized business. The complex process of legal justification and linking an asset to a smart contract is an integral part of the legalization of tokens. Without this legal binding, tokenization is just a scam. The last and perhaps most complex part of the process is the initial sale of a tokenized asset. Securities specialists are well aware of the regulations and restrictions that are introduced by regulators to protect investors in their respective countries. However, investors who have dealt exclusively with cryptocurrencies are not aware of these regulations and somehow think that those rules do not apply to them. That is why we at Liqwith believe in tokenization of assets and not in inflating crypto bubbles, which are backed solely by the assurances of the project's founders, many of which are not even able to pass a simple KYC, let alone be responsible for the funds of their investors. The 2022 bankruptcy of a series of crypto lenders and exchanges demonstrated not just a negligent attitude towards finance, but rather the complete absence of any kind of decent management or understanding of existing rules and regulations. Without being fortune tellers, one can notice a clear trend towards the formation of regulatory rules for the cryptocurrency market. Understanding all these factors, Liqwith continues to develop products and services directly related to compliant tokenization and the legal circulation of digital assets. We are pioneers in the industry, and we are happy to share our knowledge with you. Want to know more? Visit us at www.liqwith.io or drop us an email via welcome.
Oké, ja, eventjes een klein intermezzo, a small intermezzo, sorry, again, I have to do it in English. Yes, today's topic is blockchain solutions for investment funds, and I think what is good for people is just to know first, you know, what kind of investment funds are there actually, Roel? I mean, and the second question is how could an investment fund benefit from blockchain or DLT technology, do you think?
Well, so first of all, the whole investment space is very wide. So you have sort of the traditional fund where a lot of people or companies put money in, and they, as financial investors, invest in all sorts of companies. This is generally the numbers game.
Mm-hmm.
Yeah, so they need to have 100 startups or scale-ups or whatever they're focused on to put the money in. Then we also have what we call entrepreneurial private equity. So those are the ones that are not going for the numbers, the financial aspects, but actually they are basically what they do is they step into the driver's seat of the company and actively get engaged And at that point in time, they have bigger shareholdings in those companies. And then we see, of course, institutional money, so not real investment funds, but those are, we're talking about big pension funds that put money in directly into larger organizations, etc. Now, there's big differences, because if you invest in large companies that are publicly listed, you can get in and get out, and that's what we generally see. But the most profitable sort of stake of the whole business world generally is the world of scale-ups and the SME world, entrepreneurial world. And basically what we see there is that there's lack of liquidity. So the standard process, if you look at the initial launch of Uber, for example, the initial, you have the Series A, Series B, and it can be 9-10 years before there's actually an IPO or an exit moment.
Okay.
And big funds or small funds, they also have to deal with the volatility of the market. And the market volatility sometimes says, look, we'd like to exit here, and if there's in a company like, say, 10 investors or 15 investors, the only option you have is to say, with these other 14 is you want to buy part of my position or my entire position, and that's it. And that's a very difficult situation, of course. Because there is no liquidity, and most of them are there. Now, what we have seen, especially again last year, is with the volatility because of COVID or Ukraine, liquidity dries up in the market. And that's a problem, because if you're under pressure and you're about to lose money and you want to divest and there's nobody who wants to buy, that's a problem. So one of the opportunities that we've seen, and remember, I'm in the private equity, we're an entrepreneurial private equity business. So one of the things we do is we allow smaller investors in an early stage. And using a blockchain solution or tokenized asset solution, we don't have to make the cost of doing sort of an IPO that you do with a big financial institution. But you do open up not to 5 investors or 10 investors, but you can give the staff, you can give it to other people, external investors, friends, families, plus, and you can end up with hundreds or even thousands of investors. And guess what happens then? If you want to sell part of your position, there's way more market and activity.
Just because they are, you can trade between the larger amount of shareholders, basically.
And
the shareholders is the market.
There's a bigger pool. And we all know that, of course, KYC is a very important process here. So you don't want to be selling out to an anonymous person. But because if you do this sort of, let's call it share funding, that's how we refer to it in our business, it gives you the opportunity to bring on board way more and smaller investors. Now, the smaller investor is really interesting. First of all, this can be your staff, but this can also be friends and families, and you don't need to get your 500K plus sort of investor at a certain stage, because that market is limited. If you get different type of investors in there, that's only possible because of the cost of issuing a security token, and no matter whether that's a business bond or a share, the cost of doing that on the blockchain is so much lower than doing it in an administrative paper world, or the alternative, going to a crowdfunding organization, or do a small IPO on a small exchange.
I always say it's exponentially cheaper and it's exponentially faster, basically, and that is I think the key takeaway, if you look at tokenization of assets and the transactions you can do with those assets. I mean, that's all about speed and about cost at the end of the day, I guess.
And that is an important aspect, because, but even more importantly, so if we at an early stage can test the market with mass retail investors, and whether it's friends, families, and employees, etc., or maybe even more, depending on the type of business, we get great feedback on the status of the company, because through this blockchain alternatives, at least in the solutions that we use, we can use polling and voting. So we set subjects out to the shareholders, and we get the wisdom of the crowd.
Yeah.
Now, the most important thing nowadays we're seeing trend-wise is what we refer to as steward ownership in business. So let's say big shareholder first businesses, the trend is moving away from that, from the quarterly results, and it needs to be steward-owned businesses, integrated in society, where they actually have their offices or factories. Now, with these sort of mechanisms, you can make the environment of the company part of the ownership. You could even sell shares to the local community or city hall, if they're allowed to invest, of course, because there's some debates there. And be way more integrated in society. Now, that gives knowledge of the crowd. That gives straight feedback on how good your customer is doing, or your business is doing. And interestingly, what we have learned, and this is specifically for retail-oriented businesses, right? So to commit customers in retail business, we used to use loyalty concepts, right? Nectar, or in the UK, or Air Miles here in the Netherlands, maybe also in other countries, or your frequent flyer miles from the airline, maybe more well known to most people. But what happens if you give them shares, or you let them buy shares? And on a number of occasions, we actually did some measurements, and we saw that the best customers bought twice as much than the second best customer. Now, what that did, the best customers were all customers that bought shares.
They're more committed, so
they're more committed, and we even compared it to customers who had loyalty products, so they got discounts and stamps and all that sort of thing, and then it was even 50% more revenue generated per customer, so total customer value or lifetime value of that top segment increases dramatically. So it's not just, giving some shares and raising some funding.
No.
In the retail business, this is really about binding your customers into your business, accepting the feedback, rebuilding your business, and you can get all the data and numbers through engaging, but also through measuring who's a shareholder, how many shares do they have, how much wine do they order, or how many of my products do they order, right? And that's one of the most profound, what we initially thought to be side effects of the share funding.
It's actually becoming one of the major drivers of tokenization, so to speak.
Well, it's climbing up the ladder.
Yeah. But no, I would say, my experience is, I think that the time is right for tokenization because of the concentration of banks. I mean, I don't know if you heard it, but in Holland there is almost no physical bank presence anymore. It's all online. It also means that for the SMB market, it's very difficult to get a loan because it's considered very quickly risk, especially when you enter stuff online in a form you actually don't know whether that's a trigger for risk, and the more they're going away from their customer, the more risk avoidance they become. And actually that triggers more risk avoidance, because then there are margins, because if you don't invest in SMB and only in risk-free assets, well, the yield is also very small for a bank, meaning that their yield is shrinking, so their risk appetite is going down because they need to have some yield.
It's a circular model.
It's a so actually what's happening is they're killing themselves at the end of the day, the banks.
Well, killing themselves, I'm not sure.
No, not killing, but I mean...
They don't leave a very friendly impression. So if I look at my own company, right? So pre-COVID, we had an account manager.
Yeah.
When COVID came, everybody moved to e-banking, and all of a sudden you get a message, the account managers are disappearing, so talk to the chatbot.
Yeah,
well,
that's
I'm
horrible.
50 years old, sorry, I don't do a 500,000 euro loan with a chatbot.
No, that's...
I want to talk to somebody. Yeah, even if that person, you know, that's what I do. So it's weird, right? So also, actually, we've changed bank because of what happened.
Yeah.
So it's a real lesson that there is competitive market space in the banking. Anyway, but
Yeah.
that's
But
going
anyway,
back.
it's
These banks, because there's something really else that I see. So as I told you, I teach monetary economics and future of finance at the university in Porto in Portugal for the executive MBAs. And one of the things that I do there is I show and inform the people and let them think through it that we issued so much money that the entire financial system, even since 2008, has gotten, I think at the moment 3.2 times more debt than in 2008 when we had a financial crisis, right? So the risk of a bank falling over, and I don't know who follows this, but we've seen in September, October, and actually most of last year that UBS is at serious risk, right? And this all has to do with off-balance sheet banking. Now, as a consumer or investor, everybody's been pushed into funds, yeah? So what happens if a bank falls apart? The fund is gone. And guess what? You don't own the shares of the company. That's then owned by the one who executes the bankruptcy. And the thing with tokenization, and that's the beauty, you own the asset.
Yeah.
So it's actually for an investor, all the fund business, okay, there's good returns, etc. And I'm not going to argue against all funds. But the upside of tokenization is that you actually own what you've bought. And whether it's a share, piece of gold, or part of a company, you can touch it, feel it. And if the bank or the intermediary goes bankrupt, you don't lose your asset.
No, I think we built a system like that already at Liqwith, by the way, where we said, okay, the fund itself is tokenizing the assets of the fund. And a small part is then issued back to the investors of the fund, and they actually pay with the shares they have of the fund. So they can diversify in the fund, and every time they own the shares. And that's a profound difference. I mean, it's actually very difficult to explain to people because it's so alien to people.
Look, people don't see the risk of all the the trackers, the financial products that have been created.
No, they don't.
Because they don't understand that a lot of these financial products actually can barely meet up to the commitment in the market.
Yeah?
Yeah, we've had this, the videotape company, what was it? Where they were speculating.
GameStop?
GameStop, exactly. And there you see the whole speculation with financial products.
Yeah, that was...
Yeah, but this is likely to happen again more and bigger.
Yeah.
And that is because the big ones taking all the profits, and look at Uber, the profits was taken before it all went to the public marketplace, right? And the consumer that could finally buy some shares might get 5% increase, right?
Yeah.
But the 5,000% was
all
made throughout the early journey.
Yeah.
And why is there no fair chance for consumers to participate at that stage?
But I think
tokenization and blockchain democratizes the entire investment process.
Well, I think that because of you lower the cost, you force funds, people who are actually issuing those shares on a blockchain, because it's on a blockchain, there is no way that things can go sour. Because if they do, at least you can monitor all transactions, because it's impossible to do.
And as long as it's in your wallet, right?
What
you own is in your wallet. If it's in your wallet, you own it.
One of the things that we do at Liqwith is we are strong believers in self-custodian. It means that we issue wallets and we say, okay, this is your wallet and this is your, let's say, vault where we put your shares in. it means that whatever happens, we cannot just take your shares out of your vault. So it's you who have to do that. You actually put some responsibility at the shareholders. I mean, that's something people have to get used to, because normally a bank would say, hey, don't worry, just give me your money and we will do the rest. You can go to sleep. That's no longer valid. I mean, people have to wake up on that and say, hey, I mean, that is the, if I give presentations about our technology, it's one of the things that I always emphasize how important that is. I mean, people say, oh, it's quite difficult, people need a wallet. Yes, but we will give them a wallet, don't worry about it. You know, it's an essential, well, maybe it's the essential piece of the puzzle. Again, you mentioned also KYC, all those things have to be taken in consideration. I mean, you saw in the little video that it's not crypto anymore. It's real world assets trading. And
let's not forget where crypto stands for. That's the abbreviation of cryptography.
Yeah,
It's just a technique to secure things.
exactly.
And, you know, this is what we do with marketing. We turn a phrase into some market standard. Now, your point about autonomous wallets, I think it's quite essential, right? Of course, people are used to trust the bank, but they forget what the price it is that they're paying when they put their shares or in a fund, or put the money in a bank account, because officially at that point in time it's not theirs anymore. So I actually had this funny story. So I gave a lecture on Nijrode Business School here in the Netherlands as a guest lecturer, and I told my story, and people asked about, like, where should I invest in? I said, look, I'm not an investment advisor, but at least make sure that you own what you invest in, and that you're not investing in a financial product which basically gives the ownership to the bank, and you're just owning the financial upside or downside, right, rather than the asset. And I think what we're starting to see is people wisening up. And one of the guys called me, I think it was a week later. I called my bank, and you were right. 80% of all my investments, I terminated them all for my pension, and I all invested it in direct assets. I said, yeah, look, be happy you can still do that, because a lot has happened in the last sort of 15 years since the credit crisis in 2008. Yeah, we had the whole affair with Greece, Italy, giving them money, and where's the money coming from? It's just being printed, and there's no backing of that money with a real-time asset like we used to have when we had a golden standard. So this is real fiat money, and fiat money means no backing to the money. It's just what you believe it's worth.
Yeah, I think.
And as long as we all believe in it, it's worth something. But when we stop believing, it's gone. Yeah, right.
But Roel, please, because now we're going to
I know, but I'll get back to your point, Herman. So the point is, can you still trust the financial system? Now, some people will, some people won't, or less, to a lesser degree, and they become wearisome. And that's why tokenization, whether you're a bank or you're private equity or you're just a business that wants to raise money or commit its customers and staff or the environment, tokenization is key, because it's nowadays, it's as friendly as internet banking here in the Netherlands. You can do it via apps. It's cheap. Compared to any other technologies, it's cheaper than going to a notary and do all these changes on the paper way. So blockchain and associated technologies, web technology, etc., combined have made it user-friendly, very affordable, and it gives a profound ownership back to the investor.
What I also, by the way, we have to mention that is MiCA.
Yeah.
It's the new regulation in Europe. A lot of discussions about it. It's, if you try to download the PDF, what it is, it's 1,000 pages. So good luck, I tell everybody. But in essence, what's happening is that in Europe, they also see that tokenization is the way forward. And this legislation because we can already do it. We don't need MiCA nowadays, at least not in Holland, to do a tokenization project.
Yeah.
I mean, I think we can safely do real estate, we can do shares of companies, we can do art. We've done that already. So there are a lot of things that we can do within the existing legal framework. But there's one problem is, of course, it's technology and it's based on smart contracts. And so they say, look, the people who are dealing with this kind of technology, they need to register. We need to know who they are. We need to know whether they are doing the things that everybody else is doing in this world, like KYC, money laundering, sanction list monitoring, and whether that technology has been implemented well enough in their projects. I think it's important to, I think 2024 it will be probably, it will be law in Europe.
It will be implemented.
I hope, because it's passported, they call it. So it means once you've got a registration. By the way, I don't think 2024 is viable because there is not yet a central authority.
With every European law, whether it was SEPA or PSD or whatever, it was first announced for that date, then it was postponed to a later date.
Yeah.
Then they did version 1, and then they deployed version 2 and 3.
Yeah,
so
I think. But the good thing is, at Liqwith, I've did that cumbersome work of reading that stuff, checked our technology against it, and I'm quite happy to say that we're quite advanced there. Yeah. Again, people have to understand also that now we're talking like, tokenization is the way forward, which I think it is. And not only me, I read about central banks looking into it, other banks looking into it. So it's here to stay. What people don't realize is that it is, from a legal perspective, still some work to be done. Yeah, it's if you talk to investment managers, they are, let's say, healthy scared in some way. I mean, it's like they are so happy that they've got their structure up and running, and they're just it's working, and they don't want to touch it anymore. Yeah. And how do you think we can move forward? What's the thing that should happen to make tokenization mainstream?
Well, first of all, I've been in a lot in the payments industry, etc. Seen all the regulations, also in the MiFID regulations, in the securities industry. I must say, for the first time in my 25 years of working in this industry, I'm pretty optimistic about the way it's going to be regulated. So first of all, I think it's framed in such a way that there's flexibility in the regulation, that's necessary to develop and innovate. So they're not killing the innovation by this regulation, which has happened in the past sometimes, right? True. So that's the first thing. So thank you for all the lobbyists and all the people that did all the work there in the industry, and also to the people, writing the laws, because it looks like they got it. They nailed it, at least for a large part.
For a large part, yes.
So that's important, because in Europe we first set regulations and then we start continuing the growth. Now, honestly, the real thing that's required here is just do it. Yeah. So work with experts. Don't talk about it too much. Don't go consult or just launch projects.
Yeah, I'm totally agree with you.
And we took the risk ourselves, first in 2017 and later on multiple other occasions, because in 2017, Herman, don't forget, I think that was the first ever security token, at least in Europe.
I'm sure that
maybe in the world, from what I know.
Probably, I think, if we look at the legal framework, that everything was correct, what we did. There was no shortcuts. There was just everything was 100%.
That was spot on.
Legal,
and I've never heard any company, and there's no Wikipedia on this or history.
No.
I've never heard any company doing anything before, what was it, December 5th, 2017.
No, sure, yeah.
And it wasn't Santa Claus, right?
No, it's
Yeah?
true.
Which is a Dutch holiday here. But anyway, so going back, so what needs to happen? I think the regulation in place, so people need to understand what is there so that they understand the framework of innovation. Now, I know a lot of technicians don't like to read laws, but I think it's important.
It's important.
That's for all the businesses that want to make a business, read up on the law and don't treat this like the old crypto space, but take it seriously. And with taking it seriously, protect your investors and be clear about the proposition and why you are raising money through tokenization. Yeah, so why you're distributing.
People should understand it's not a money grab.
No, it's hard work.
It's hard work,
and that's good. And hard work pays off in the end. Yeah. So, and then the other thing is just get it done. Find technology partners like yourselves or others, and just start small. Do something. You know, if needed, let a regulator have a look. Yeah, because they're not going to tell you what to do. You know, I can imagine if you're a bank and you really want to get started, of course you consult with your regulator. You don't want to lose your bank license. But there's some interesting stuff happening in MiCA also for banks, because they rely a lot on centralized security deposit centers, right? By law, you have to put your commercial paper there or something. Now, this whole MiCA regulation could maybe help you get rid of quite some expensive components in your banking process, like a custodian or a CSD, and eliminate them.
Well, one of the
so that's one side. So just try. Be
Well,
but be transparent when you experiment. And to entrepreneurs and private equities or investors like myself, man, don't waste your time on administrative processes of all your shareholdings and all these things. Just use the technology to make your daily life easy, and get a different form of steward ownership. And the steward ownership in your business, whether you're private equity or an individual company itself, will give you straight feedback from investors who are customers if you're in the B2, in the consumer space. Yeah. Otherwise, they will give you insights on what your investors think about where the market is going. And don't forget, there's quite some bright people out there that sometimes know a little bit more or ask a so-called stupid question that is, Jesus, how relevant it is for your business, because we're all stuck in what we do every day, and it helps you transform your business. And of course, you own it. When tokenizing, you can own things. I once had a conversation with the owner of that. There were Saudi people that were owning the Empire State Building in New York, right? And I understand it's been for sale for a very long time, but for that amount of money, you know, there's maybe 5 real estate companies in the world or so that want to buy that or can afford to buy it, right? Because I think it's probably billions of dollars.
Probably.
Yeah, I'm not a real estate expert, so I'm just talking stories that people told me in a conversation. I was highly fascinated by that, and I thought, if the Empire State Building was owned by 1 million people, you could maybe easily raise the billions and maybe not even sell the entire building, but just 40% to become liquid rather than everything. It's an all or nothing game in the old world. And you know, on a strategic level, why does it really important that me as a professor or visiting professor in that matter, why does it really matter? Issuing new currency in our monetary system is no longer a solution to our economic problems, the crisis we're facing. But I think we have a total fixed asset value in this world. I think it's $900 trillion or so.
Yeah, I've read an article that to 2030 they expect more than 10% of that will be tokenized.
Yeah,
then
that's good, because then we don't have to print new money, but we create liquidity through that. And liquidity, economic or welfare is sort of money in circulation times velocity, simply put.
Yeah.
Right? So if we can liquidate these assets, we can create velocity on the money that was stuck in those 900 trillion or 1600 trillion, whatever the huge amount is of fixed assets that we can't deal with anything. So you know, so there's a higher purpose, there's a practical purpose, and it has operational benefits in your daily thing. So why not? You know, whilst I'm sitting here, I said, why are you going to say no, right?
There is, I always say to customers, there is no plausible reason to say no.
Well, there is one.
Oh,
And
okay.
that's, well, that's the reason that most people do. And when I was doing this in my business, my staff said, yeah, but that's scary. And a
Oh, yeah.
regulator and this.
Yeah, okay.
But look, I'm an entrepreneur, so, you know, being scared is not part of what I do. You do what's right, and you do what's right for your business so you can survive, you can thrive in what you're doing. And this is just one of the parts.
But what I found, you know, I give a lot of presentations with this technology, and I talk to companies, and then they say to me, it's like, but who should do this in my company? And then you realize that for most companies, it's a one-off thing. You know, you start your company, you go to the notary, you have some advisors, a lawyer or something else, you sign the documents, it's a cumbersome exercise. You're happy that you can sign. You probably haven't read it completely because the lawyer did that for you and he told you that it's okay. Now they say, oh, when there's a new shareholder, they know, oh, it's not only the shareholder, it's all the paperwork, etc., etc. Costs a lot of money. Again, a lawyer and a notary, and please don't bother me. And now you're talking to the director, to the CFO, and they have to know this. They have to know their bylaws of the company. They have to understand what this means. They have to understand what are the rights of those shares that we issue. How are we going to...
They really need to understand how the company actually operates.
Exactly.
And not how it works in practice, but how it works on paper.
It was a big surprise for me how little they know. And you're not talking, and it's not like your mom and dad company. No, you're talking about companies with a few hundred people working there, and they just don't know. Yeah, and then they got scared because they say, oh, actually, Herman, actually, we don't know. And well, that's where you have to start. Get that stuff up.
But also the first fear is you get a lawyer involved, and you know, the first lawyers, I think when we did this, were 50K worth of, and that was even, you know, very nicely put. It's something around that amount, right? But if you have a decent lawyer right now, then 5, maybe 10K
max.
Yeah. And if you make your decisions fast, you've thought it through, you know,
it's even less.
Yeah,
because it's like,
so those hurdles are disappearing, and I know for myself, my biggest fear is, oh, I have to go to a lawyer, and then, you know, there's always an unpredictable outcome. There's never a fixed price. And you go like, okay, we're going through this. So that was a hurdle for me in the beginning. But okay, nowadays, if people say I don't know what to do, it's okay. Not all lawyers know this.
No.
Most lawyers don't.
But we can help them.
Well, there are a few good law companies right now that actually understand this stuff more and more. And the big ones and small ones or smaller ones. And that's awesome. So if you don't know one, you can ask Herman or me if people are watching, and we can refer you. But that's an important aspect, because the lawyer will not only produce the work, but be very detailed and accurate in its advice on what you have to do.
On the risks that you're, you know. So let's wrap it up a little bit, because we're already 45 minutes in. Let's finish off with, for our listeners, for our viewers, you know, how can they start? What should they do? I mean, if they are saying, okay, I think tokenization could be beneficial for me. I'm an investment fund, or I'm a company. It doesn't matter so much. What should they do? What are the first steps they should take? Well, I would always say call us. We help you.
Yeah. Okay.
But I mean, that is, you know, but in general, I mean.
Yeah. What I like is before you engage with vendors in any way, shape, or form, make up your fucking mind. Sorry for the word, but don't go there and try to end up and just make up your mind if you're going to do it. You might not have all the answers, but that's with everything in life, you know. When I married my wife, I didn't have all the answers, right? I don't know how she's going to look in 10 years from now, you know, but you do it anyway, right? That's the commitment. So And whatever your reason is, whether that's your B2C company and you see the value in the sales happening, or your private equity and you see more shareholders coming, liquidity and then feedback, have your reasons. Now, once you say, okay, I'm really seriously going to explore this, yeah, you either hire a professional consultancy if you don't have the knowledge in-house to do this. And there's good consultancy agencies out there that actually understand you and say, okay, this is what we do. That's going to cost you some money, but it will help you guide through a very complicated sort of cowboy landscape, because there's not just guys here doing good stuff. You still have a lot of people that don't know what they're doing and they're still playing a role. And if you don't know what to choose, then that is so. If you know what you're doing and you have the knowledge in-house, or at least you're confident, you have a good technician, you have a good legal person that understands your business, and you have a sort of strategy what you want to achieve with tokenization or tactic for that matter, then just talk to a vendor. Yeah, get a lawyer and a vendor. And just build a pilot. So yeah, I think that those are the two ways. So either go with a consultancy, educate yourself, and set a strategy, or do it.
Okay, we have some questions, I guess. Will, can you take the?
Okay. So we have questions. Example of successful tokenizations.
Yes. Well, I can. We will put some in the show notes. But for example, quite a successful one is encryptventures.com, which is a fund where you can invest in classical art. Quite well, it's like the Empire State Building. They've got paintings, over.
I own some of it, so
20 million.
So
me too.
I played with it. So
20 million plus paintings, tokenized, fractionalized actually, and I would say go there to check it out. I mean, it's a fund style system basically. We have another one here in Holland. It's in Dutch, but Be Informed Media, which is a perfect example of wisdom of the crowd, I would say. They sell shares from 25 euros upwards, and they have a beautiful system for voting. So they are actually using their shareholders, because they say, okay, we want to make a documentary like this. Do you agree with us? Do you think that's important right now? So basically they have this forum for their shareholders, and they are using their tokens for that.
Yeah, but these are all public ones, right? So the people can look at them. They have a website.
Sure.
But also there's successful ones you don't see. So the companies we've tokenized for ourselves, I'm very pleased with that, because first of all, the staff is happy, the employees, they feel engaged, they own, they just don't have a salary, but they also get asset income and capital gains. They feel that they have more of a vote. So there's a lot of things that you wouldn't hear out there that makes it successful for me as an entrepreneur.
Well, we will put it in the show notes. At least some examples, because the public examples are, for our viewers, probably
of course, more reliable. Or
well,
more
they just want to see how it works. I mean, I can truly relate to that.
Yeah. So there's another question here. How long does the process take? And I'm going to make a funny comment here, if you don't mind.
Yeah, just.
So it can be done in a few weeks or a few years.
Yeah.
Right. So again, this comes back to my earlier comment. Make up your mind whether you really want this.
Yeah.
But that goes for any project, whether you're installing a new ERP system or this. If you really want it, just drive it through. And it's a balance between yourself as an organization and the companies you work with. And if you are sort of culturally aligned and way of working you're aligned, then you can do pretty fast. We've seen these things happen in 6-8 weeks.
But
technically it could be done even in 2 weeks or so, or a week.
Well, you're right. If you got all the information, you get it up and running in a week.
But if you have to change legal entities, you have to open new bank accounts, then you have to deal with the procedures of banks and lawyers and notaries and setting it up. And then it will take weeks, maybe months, depending on how complicated it is, how much you have to think. So the legal process or the consulting process are the ones where there's a lot of lead time, because you have to make decisions. But the technical implementation itself, depending on the level of complexity, is weeks plus.
Yeah,
there's also a question here, Herman, do you have an app for this? I think you guys actually have an app at Liqwith, right?
Yeah, we have an app.
We personally don't use apps for nobody. It's
No.
just a web-based system, but
We have
they
an app, and the app is just basically where you can enter your wallet address, and you can in the app monitor what's in your wallet. Basically, that's
so
what
the
we
answer
created.
is Liqwith has an app.
We have an app, and I have to also mention that the software that we deliver is also responsive. It means that it's online. People can just use their browser, and it all works perfectly in the browser. So you don't even have to have your private key in your wallet to do a transaction. You can do that also via your phone. And
so basically, it meets the normal sort of usability standards that people would have for a weather app or banking app or whatever.
Oh yeah,
right?
it's absolutely true. Yeah. Okay, those were the questions.
Those were the questions that came through.
I think, well, we almost did a full hour, 5 minutes less, so we thought we would do 45 minutes, so not so bad, Roel. I think we can continue. I know, we can continue.
But let's get a bottle of wine then, right?
Yeah. Okay, well, I want to conclude this webinar for now. I hope you enjoyed it. I hope next time you will join us again. Next time probably we will go more in depth into a specific case that we've been working on, just to give you maybe some inspiration on how to do it. We will touch upon some legal aspects then. So
it's good to have a lawyer in the room then.
Yeah, we will probably have a lawyer in the room. I know one that we can use, and that's probably not such a bad idea to do the legal stuff also, discuss it.
I think from a personal experience, the legal is most entrepreneurs don't have a lot of understanding of it, and it's so important. And it's a little bit scary sometimes.
Okay,
right?
let's
let the voters decide. Let the viewers decide. If they say lawyer in, then
lawyer in. We do the lawyer in.
That's democratizing the process.
Okay, Roel, thank you very much at least to come on the show, and probably we will see you a lot more times here. Thank you very much.
Thank you very much, Herman.
You, everybody, thank you for watching, and see you the next time. Bye bye.
Maybe you have heard of tokenization of assets, but do you know what it really is? Do you know how tokenized assets compares to cryptocurrencies? Can you tell the difference? All these questions and many more will be answered in this short video. Let's start with the fact that asset tokenization is not directly related to the cryptocurrency market. Many people confuse tokenized assets with cryptocurrencies. This is, of course, totally false. What is really being used when tokenizing assets is distributing ledger technology, DLT, or blockchain technology. It is thanks to this technology and the technology of smart contracts that the concept of asset tokenization has become possible. Another profound difference is the fact that tokenization is the ability to display a real asset on the blockchain. Real, not virtual. The value of a tokenized asset cannot be less than its real value. For example, art tokens of a valuable painting will not be cheaper than the painting itself. It is actually rather the opposite. Due to the fractional ownership of such a painting and the promise of free secondary trading, the total value of the tokenized painting can increase by 10 to 25%. Cryptocurrency creation is often perceived as a technical process that just needs to be implemented. With tokenized asset creation, however, we also have to implement legal and operational processes. The issuer cannot just create a token on the blockchain and imagine that this is a tokenized business. The complex process of legal justification and linking an asset to a smart contract is an integral part of the legalization of tokens. Without this legal binding, tokenization is just a scam. The last and perhaps most complex part of the process is the initial sale of a tokenized asset. Securities specialists are well aware of the regulations and restrictions that are introduced by regulators to protect investors in their respective countries. However, investors who have dealt exclusively with cryptocurrencies are not aware of these regulations and somehow think that those rules do not apply to them. That is why we at Liqwith believe in tokenization of assets and not in inflating crypto bubbles, which are backed solely by the assurances of the project's founders, many of which are not even able to pass a simple KYC, let alone be responsible for the funds of their investors. The 2022 bankruptcy of a series of crypto lenders and exchanges demonstrated not just a negligent attitude towards finance, but rather the complete absence of any kind of decent management or understanding of existing rules and regulations. Without being fortune tellers, one can notice a clear trend towards the formation of regulatory rules for the cryptocurrency market. Understanding all these factors, Liqwith continues to develop products and services directly related to compliant tokenization and the legal circulation of digital assets. We are pioneers in the industry, and we are happy to share our knowledge with you. Want to know more? Visit us at www.liqwith.io or drop us an email via welcome@liqwith.io. Liqwith, your innovator in finance.